would you have taken this one as it? This one, I don't think anyone would have taken. Technically, that candle there closed back within, but it was just a bullish candle. Nothing really bearish about
Yeah, I
that.
think there's times where we can be a little bit subjective with it as well.
Yeah.
I don't know if you, I think you
One
were
for
just
you.
discussing this when I reset mine, but one of the things I noticed with it more than anything else is that most of the entries were in Asia, which is a bit annoying.
Yeah.
I don't know if you found that in your testing as well, is that 60% of the entries it felt like were all in Asia, which was really frustrating.
Your
And I don't know
bigger
whether
runners,
there's almost like an average,
your bigger
um,
trades definitely started in.
yeah, I don't know whether there's maybe a like an average pit size that we need to test on this for the stop loss, so that we can
Yeah.
then almost like set an entry. But the problem is that you then risk it just kind of blowing through and carrying on. But I think it's a nice little addition. Where it all came from, we were playing around with some numbers I think a couple of weeks ago, and we were looking at the chance of the previous day's high or low to be swept within a 48-hour period. And we noticed that 60% of the time, the previous day's high or low does get swept. So from there, literally in the webinar we went through it, didn't we? And we kind of went back about, I think it was like 2 or 3 weeks, and we just kept getting trade after trade after trade. And I think all three of us have found the same results really. I still need to work out your stats for you to work out your numbers, but have you sent that most up to date spreadsheet to me?
Yeah, yeah.
I got that one,
Uh,
by.
can you see this one, the spreadsheet on my screen now? Or is it just
Yeah,
the
yeah,
charts there?
yeah,
So you can sort of see the time of the entries there. I mean, we've got Asia. You probably would have been up for that one. You'd have been up for that one.
yeah,
Asia,
yeah,
Asia, Asia, Asia.
yeah,
You see, so like you say, a lot of them are within Asia, and especially in Asia, you get the
yeah,
bigger trades if you was going to hold out.
yeah.
So that's like we'd have got that one. You wouldn't have got that one. Potentially
Then
no trade
potentially,
there for no use.
for our Australian members, it's an
Mhm.
entry for them that they can play around with, definitely. And I think as you said, Sam, I think we were speaking, weren't we, about your week last week, and I think you took 5 or 6 trades last week. Majority of them were this. You've had one of your most
Yeah,
profitable weeks. You've not held really
definitely.
past 1.3. And and this is what we was talking about, building these strategies. What I've had a couple of conversations recently where people are, maybe finding uh, the strategy itself difficult to implement, or they're struggling kind of finding a plan out of it. But what you've got to remember is that what I've taught you guys in the course is a framework. And whilst I can give you a trading plan, you wouldn't follow, and I don't personally follow everything in the course and trade every single entry whenever you see them. What you've got to do with the course is you go through it. You obviously your fundamentals and your basics, your theory, your liquidity theory, and your market structure theory, and all those other bits and bobs. That's your kind of your groundwork. See that as like the foundation to everything that you do. Then when you get into entry models, times of day, and things like that, that's where you've kind of got to build your own strategy out of it. Excuse me, I can give you trading plans that you can kind of try and implement, but it's very, very difficult to trade somebody else's trading plan, which is why I have to try and keep them as simple as I can so that you can build from it. The traders that will do best out of this and the traders that are performing well out of this are the ones that are taking the foundations, they're taking the theory, and then they're building their own trading plan out of the concepts. If not comparing myself to them at all, but if you look at ICT, for example, okay, and you're an ICT trader, you wouldn't trade everything ICT teaches because he's got like 15 to 20 different models. You're not going to
Right,
trade
Tinder.
every single thing that he teaches. You're going to pick the bits that you like. So a lot of people are trading like ICT Silver Bullet at the moment, okay, because it's a really usable trading. So it might be that you guys want to take these daily entries, okay, and whereas Sam's going for his 1.3, you might think, do you know what? I'm going to wait for my daily entries, and then I'm going to wait for my ISC MSU to occur. For me, for example, my go-to setup is my Asia sweep, and then I'm waiting for my Asia sweep to happen, and then I'm getting into my marketplace, use my weekly cycle. So you've got to take the course a kind of as a framework for something that you are then going to build a strategy out of. You're going to take the bits that you like. You're probably going to add in bits as well. Like me and Robbie were talking recently, there's bits that he's using from other strategies that he's kind of implementing as well. And where traders find their success is when they've got a strategy that they've built from all the core and key knowledge that they now know and love. Chris, we were talking the other day about the NJAC guys. You might take bits from their strategy and implement it with my strategy. And then you kind of build and you grow and you develop. Me, for example, and what I teach you guys is a hybrid of all the different strategies that I've learned over my 8 years of trading. No one of them is anything that I've learned from anybody else. I've taken elements from all the different trading strategies that I liked, and I built a strategy out of it. And that's the kind of cycle of a trader, really, is that you've got to build your strategy using all the information you have at your fingertips, and you've got to build it in a way that suits you, because we all have different schedules. We all have different appetites for trading. We all have different abilities to be at the charts and not be at the charts. Some of us are in different time zones. Some of us different work patterns. So, no one of us is going to trade exactly the same way. Hopefully, we're going to use similar entries. Hopefully, we're going to use similar theory when we get in and out of trades and things like that. But ultimately, it's really important for you guys to build out of the course your own strategy from it. And there's only so much I can do to get you to that point, if that makes sense. A lot of it, it will come from your work. And what I wanted to start by talking today, and if it allows me, I'm going to share my screen. So replace current share. I'm going to share it with this, which is now, come on, we're working. You all see my screen?
Yeah.
Yep.
Fantastic. Right. Okay. So I'm going to open up just a completely blank chart, and I'm going to kind of talk you through how I would look at how I would look at back testing a strategy. And it's kind of a 3-step process that I think is really, really important. Now, the first thing that you need before you go into this process is you need to have built yourself a trading plan. Okay, pretty basics. You need to be knowing when you're going to be trading, why you're going to be trading. You need to build. Sorry, my partner's just rooting around in the bin. Why are you in the bin? Getting something out of the bin. Weird. We've got more money than that. So you need a trading plan first and foremost. You need to understand when you're going to be trading, what you're going to be trading, how you're going to be trading. Okay, and we talk about this quite a lot. We talk about trading checklists. So your trading checklist might be let's do say one external liquidity sweep. Okay, that's number one. Then 2, we're going to wait for impulse and imbalance. And then we want 3, we want a market structure shift or momentum shift on the 5-minute chart. And number 4, we would like then a retest of at least 50% lower time frame range. Okay, so let's just say it's a really simple, you probably have more steps in it than that, but really, really simple. That's your kind of trading strategy that you want to use. So the first thing that you should be doing before you do anything else, and I haven't got access to my Google Sheets right now, but if you look back onto the previous webinars we did, you'll see my Google Sheets. It's really, really simple, just kind of Excel spreadsheet where I've got kind of 3 columns. I've got the date I took the trade, the result of the trade, how far the trade ran to, because that's a really, really important one. So you'd have date in one column. You then have, come on, I reckon you can do this. Let's go. Right, date in one column. You then have result. You then have potential. This is a really important statistic to record. Why is the trade potential really important?
So you're not cutting your winners too short.
Yeah, exactly. So once you've gone through, say, 50 trades or whatever your trading view may allow you to go back, because if you're trading a 5-minute chart, some of you will probably know, you only get so many candles unless you pay like $100 a month or something stupid. So once you've got and traded so many, you might have say 30 to 50 trades. Trading potential is really, really important. So let's say in all of these trades, for example, Come on. Okay. You had blah, blah, blah. And you had a result of 2R. That was the result you were going for. But then all of your trades would go into like 4R, for example. Just a rough example. Okay. Or let's be more realistic, 2.4R. Okay. And this is obviously your trading view link. So that's why you put link to your chart so you can go back and look at it as you need to. And you did this over 30, 50 trades. Ideally, I would always want 50 trades as a minimum before you move on to this next step. Okay. What you can then see is that the minimum trade value that we went to, keep pointing at the screen and realize you can't see my finger. The minimum trade value that we went to was 2.4. So this strategy now tells us that we can go to 2.4 consistently and make 0.4 more on each one of our trades. From there, you can work out, because some of them might go to 5, some of them might go to 8, some of them might go to 15. You can then work out from the numbers that you've got, well, what happens if I go to 5R? Can I 2.5 times my results from the 2R that I'm currently going for? Can I 2.5 times my results by going by 5R? Obviously, if you're aiming them for 5R, you'll have more losers or more break-even trades. So that data is really, really important to the progression of you. And the way that you do this, really, really simple, is I would just go back in time, okay? I would literally go back as far as I can on the 5-minute chart, for example. I would draw on my trading range. I would then zoom into that, right? So let's say, so I want an external liquidity sweep. So let's find an actual valid trade we can use. Always the way, isn't it, when we do this? Okay, so let's just say that's our trading range right now. Okay, this Asian range. We have a external liquidity sweep down here. Mark that on as our external. And then we've had, if we zoom in on that, so have we had impulse and balance? So no. Yes, impulse and imbalance. Okay. Have we had a breaker structure on the 5-minute chart? Well, yes, we've had that one here. Okay, example. I'm doing this very crude. You know, might not be getting this absolutely right. Because technically I'd probably argue that that's the 5-minute breaker structure, but just humor me for now. Okay. We've then got our imbalance, which is down there. So we mark that one on, and then we want to retest of at least 50% of that zone. Yeah. Okay. So we take our trade at 50%, stop below the low, first profit target. And again, what you want to do is you want to set a profit target. Now, we've spoken about this a few times before in previous webinars. It's really important when you're testing a strategy to do what? What should you be aiming for?
First liquidity point.
First liquidity point, yeah. I would say that's probably yeah. That I mean, it's not wrong.
I mean, at least 1-to-1
Yeah,
liquidity
exactly.
point.
So you need to see whether this is profitable with a really short entry, because look, if you can't get at least 1R, and for me, my sweet spot is 1.3R, because then you've got just that slight edge. You know, think of it like a casino, right? You've got a slight edge then over the losers. Okay. If you can't get 1-to-1R out more than 50% of the time, what does that prove you?
It's a losing strategy.
A losing strategy, exactly. Okay. So before you go through, and because me and Rob were talking about this just before you guys jumped on, backtesting can be really daunting, right? Okay. It can be a really daunting process because you think, right, I've got all this strategy. I don't understand it fully. I haven't seen it play out in the marketplaces for the last 2 or 3 years. I'm testing a new strategy. How am I going to test it effectively? This is the way that you do it first and foremost. Regardless of what I'm aiming for or other members are aiming for, if I'm going for like, sometimes you'll see me post, I might get a 3R or 4R trade, but you'll notice if you've been following me for a little while that I don't normally trade much more than that. Okay. What you've got to do first and foremost is make sure that you can implement a profitable edge. Okay. Because you need to make sure that, you know, you might be going through this and you might have built your list of your checklist that you're following, and you might have missed out an important step that you haven't realized. So this is part of this testing process. And this is where, you know, when you see on Instagram, you get your, I think the social media world is changing now quite a lot. It's becoming a lot more honest, because I think a lot more of the honest traders are surviving and a lot more of the fake gurus are kind of falling by the wayside. But a lot of traders now are talking about the fact that this takes work. This is going to take years and years of work. This is going to take time and dedication. This is what we mean. This is the boring bit that you have to do, okay, to get yourself better. Okay. This is like if you're a professional footballer, this is like sitting with your coach and watching back your game and watching back your technique and making those little tweaks and all the admin work that you need in any kind of career that earns a lot of money. This is the boring admin work that you've got to do. Okay. So the first thing you've got to do is you've got to make sure it's profitable and you can win more than 50% of your trades at, I think, 1.3R, because then at least if you traded this and you had a 50% win rate. Now, I'll tell you this, if you follow my liquidity concepts and use my entries, you will always get more than a 50%. If you're not getting more than a 50% win rate using my liquidity points and my entry models, you are doing something wrong. And if you're finding that, then obviously reach out to me and we can sit down and we can work out where you're going wrong. But as long as you're getting 50% of these trades winners, you're making money, right? You might not be making a huge amount of money, but you're still profitable. And at the moment, most of you, or historically before you joined me, most of you will have been unprofitable. So even if you can do 1.3, there's so much fixation on getting massive wins, isn't there? So much fixation on getting like a 5R or a 10R or a 50R win. And it's just bullshit. You guys, you just don't fucking need it. If you had 1% per trade and you were winning 2R trades consistently or 50% of the time, every 10 trades, you're making yourself 5%. Why do you need more than that? If you do 10 trades every 2 weeks, you're making 2.5% a week, $100,000 account. You know, what you're doing, you're doing 10% a month, you're making 10 grand a month. Take out your prop firm cut, you're going home with 8K for just going for 2R. And you're taking 5 trades a week. So the power's in the numbers. And what you need to do is you need to think at scale. You need to think, does this work if I had $1 million account? Think at scale now. Start thinking like, I'm going to become a successful trader. I'm going to put myself in a position where I have hundreds of thousands of dollars of prop capital behind me. Do I need to be sitting there trying to get 10% trades out in the marketplace? Absolutely not. If you look and you follow through the feed, especially for those of you who are newer to the group, and you look at us traders who are winning consistently, Lou, or you use an example. Lou, I know when you joined, you used to go quite far on your targets, didn't you? Nowadays, you're going shorter and shorter and you're winning more and more. And that's the thing, is that there's that greed, isn't there? There's the greed element to it of where we're trying to get more out of the marketplace all the time. And I have it all the time. My trades will go to 2R. I know I should take profit. And I'll be like, oh, what if I can get 2.5? What if I can get 3?
Yeah.
What I've started doing now, it's a little bit naughty. I've started just bringing my stop up. So if I'm at my target now, and I wouldn't advise this because I only do it when I'm really confident. If I'm at my target, what I do is I move my take profit up a little bit and I put my stop just below. Then when it raises, I do it again. Then it raises, I do it again. Sometimes I catch a winner. Sometimes when I'm at a point where I'm happy with my profit and I'm happy where my stop is, that I'm making profit either way, I will then almost like trail it a little bit, which is quite a nice little tweak. Anyway, the point I'm getting at is you don't need massive wins. What you do need is you need to know that your trading strategy works consistently. So coming back, we digress a little bit. What we've got here is we've got some basic rules that as long as 50% of your trades are winning, you're making money. The first step to your backtesting process is just going through the charts and marking on all of your external liquidity sweeps using this strategy as an example. All of your external liquidity sweeps. Then whenever you've got an external liquidity sweep, taking the entry. Why does this always do this to me when I'm trying to show you guys examples? Then when you've got your entries, okay, so this is my perfect entry. I love this entry. Okay, look at that, absolutely beautiful. So got an external liquidity sweep down here.
Yeah, see, for me, that's a session sweep for me.
Yeah.
I mean, that's my thing. I'm a session sweep guy. If you ever looked at some of my charts, I'm all about sessions. 100%.
Couldn't agree with you more. What we've also got though is we've also got this as a range. So that is also a range because it's taken out. So whilst you are right, it's the Asian session sweep. We've also got there true breaker structure, which gives us that new trading range to work from. That trading range was then swept by the London liquidity, which is our external liquidity. We then get our impulse, imbalance. We might not actually get an entry on this one, sadly. just missed the entry. Okay. And then that's something that you maybe put into your Excel spreadsheet, being like, this traded into the imbalance, but didn't trade into the 50%. And it's that sort of data that you want to play around with, and you want to make sure you've got access to, so that you can, constantly look back at these trades and make sure that your rules are correct, because it may just be the case that your rules aren't correct, and you need to tweak them and tailor them a little bit, and then from there you can then refine, because this is not just a case of, once this is profitable, kind of setting yourself off and then off you go. It's a case of making sure that you're refining these rules as well, because you might go through this, and just by doing this process, you may find that you might not even need to make a note of the fact that you keep missing trades when the imbalance is maybe in the top half of the range, for example. It may be the case of, you just notice that and you acknowledge that, and you then think, well, I'm going to go back and do that. So what you've got to do is you've got to do this, and I would go back. Ideally, you want 50 trades, but if you're testing lower time frame entries, you probably won't have the candles to go back that far. But 30 to 50 is your kind of sweet spot, and then you can continue to forward test, of course, until you've got your 50 trades. So what do you think the benefit is of following that process? What happens once you've completed that process?
Confidence, turn it into a mechanical system.
Yep. Confidence. Anything for anyone else?
Know what your win rate is?
Know what your win rate is, yeah. You get your data. Anything else?
Train your eyes to see the entry.
Yeah, exactly. That's what I was looking for. You get your eyes dialed in. So by following this process, you then dial in to the entry that you're looking for. It's no longer a question mark anymore of, is this my entry? The answer is, yes, this is my entry. You see it, and how many times have you learned something about trading, whatever it may be, and then you come to the charts and it's almost impossible to see it, isn't it? I know, well, perfect example. I started trading gold 2 or 3 weeks ago now, and it's becoming my favorite pair, because I used to look back at gold and be like, how do people make any money with this? My eyes weren't dialed into it. Went back, did some testing exactly like this, kept seeing my setups come up all the time, and not just my setups, but I'd see my setups and I'd see them go a lot further than my EU trades were, and I was like, shit, I've got to start using this. And I've had some of the best weeks I've had in the last 2 weeks in a long time. So everything always looks confusing and difficult when you first look at it, because it is confusing and difficult. When you got in a car for the first time, you didn't know what all the buttons or the dials did now. Now, if you've been driving 10, 20, 30 years, you get into any car and you know where everything is, and it's all just familiar. And the same sort of principle applies. You get your eyes dialed in, you know what your stats are. Okay, you know that if you took every single trade, you are profitable by this much, and you're blah blah blah, and you've got all that data. That data gives you confidence, and then what you do is you then do the next process, which is what I would class as process 2. I hide that. Nope, I'll do that. I'll get rid of this horrible pop-down screen. It's annoying me. Replay. There it is. Replay. Okay. So that's process number 1 of your backtesting. That gives you the raw data that you need to then start considering trading. The second part of the process should be making sure that you can do the same thing, but using the replay tool, which is basically exactly the same. I'd probably pick maybe a different pair or a different time frame for this. And what you're then effectively doing is you're going to be looking at your key areas. So let's just say that we know that, well, obviously we know this is a range. Okay, so that's now our trading range. You mark on your true breaker structure. Okay, let's get rid of that. Okay, let's say we have made that tweak. I'm just using an example. So we're going to enter at the imbalance. Okay, that's our trading rule. We've made that refinement now because we've gone back and we've seen that actually a lot of the time we don't get that retest of 50% because it's retesting the imbalance, and the imbalance is what seems to be making it reject from. Okay, So we've got our range now. So all I'm waiting for now is I'm waiting for a external liquidity sweep. Okay, well, we've got London liquidity coming in. So I'm going to be paying attention. Right, London liquidity has come in. It's taken out the external liquidity. It's given us our imbalance. Okay, so now we know that we're going to set an order at that imbalance. We're going to set an order at the area. So with imbalances, if you're using them as entries, by the way, you can do it one of two ways. Just a little tip for you. You can either use the candle that created the imbalance. Sometimes that can be risky, but it can get you to your profit target quicker. Or you can use the low of the range, which is the extremely safe stop. The low of the range obviously means that your trade has to run further, but it will often mean that you get into the trade, get you into the trade and keep you in the trade safer, because on the lower time frame there may also be imbalances down there, of course. Okay, so we then get tagged into our entry, so we know now that we're in our position. Okay, and this is exactly why you want to use either a different pair or a different time of price, because you will remember certain trades when you do this process, and then you log it in exactly the same way. With, again, another reason why to use a different section of price or maybe a different section of a different pair is because now you can collect more data. You might, like me, want to trade two different pairs, so you've got a couple of options throughout the day. So you do the exact same process, but now you're using the replay tool. Why do you think we use it this way around? Why not just go straight to the replay tool from day one? Why wouldn't you just immediately go to the replay tool? Because obviously this is more like live market conditions, right?
Because I don't think you've seen your setup enough to really know what's, to be confident in it.
Yeah, bang on. You've got too much to think about as it is.
Yeah,
right?
Too much going on.
You've got too much going on. You're trying to manage a strategy, learn a strategy, see a strategy, dial your eyes in, and now you're trying to catch it live. Okay, and this is why I think backtesting becomes really daunting, because if I said to you guys now, and well, actually, I did this last week. I said to Sam and Anton, I said, right, I want you to, over the next week, get me 50 trades on this strategy. All I want you to do is to go back into the charts, and I just want you to find the entries, both of them, complete that process really, really easily. So step one on your backtesting is a really simple process, because all you've got to do is you just got to go on and mark your charts up. Then when you have that confidence, use the replay tool. The thought of learning a new strategy and then purchasing something like FX Replay, or even using the replay tool and having to manage both trades and trade management, position size calculation, and all that stuff, is really, really daunting. This step-by-step process, it just builds that confidence, and it gives you that feeling where you can just I don't know. It's difficult to explain. It's difficult to explain. There's no better feeling like knowing your strategy well enough to trade it with blind confidence. Like Sam, for example, last week got to a point where he was just like, I was seeing his trades appear. I wasn't taking them personally because I was trading my own strategy, my own bits and bobs. Some were just taking them and they were just hitting over and over again. And I remember there was a couple of times, I think there was one on Tuesday, I think there was one on Thursday, where I sat there. I think we were talking in the Discord, weren't we, Sam? And I saw you take them, and I was taking like 0.10 unit sizes on Euro USD, because I thought I'll get into it. And they were running to like 2, 3, 4, 5R, and Sam was out with his 1%, and I took my I think I got on one of my trades, I got like $3. But Sam had that confidence to do it because he'd done the testing, and that's that feeling when you are so confident in what you are trading that you can just go into the marketplace, you can see your setup, and just be like, I'm just going to take it. There's no other feeling like it, especially if you've been working for years and years to get to where you are. So step one, we want to use the just marking up charts. And I do that process just every single week as well. So I go back into my charts and I mark up anything that I've missed. I work out why I've missed it. Was I in a trade elsewhere? Did I miss it because I was emotional, nervous, didn't trust my setup, whatever it is, which still happens to this day. There's times where I look at things and my setup's there, but something doesn't feel right and I won't take it. And that's where I'm still, having to teach myself to be a bit more mechanical, because I traded for so long just on feeling. Have any of you guys been there where you kind of trade on feel? where you feel like the market's going to do something, or it just feels drop
all the time.
Yeah,
too much.
Yeah. It's a horrible feeling when that goes wrong, and a wonderful feeling when it goes right. Right.
Yeah.
I think that's most traders really, and it's really difficult to unlearn that because there is a bit of an art form to this, and art is all about feeling, isn't it? We're not going to get too airy fairy today, but art is all about feeling and emotion, and this isn't an exact science. There's so much subjectivity in it, so it's really important to have these mechanical rules and just learn your edge, trade and test your edge, and then just go out there and just fucking go and do it. So the worst thing that's going to happen, guys, is you're going to get a 1 hour loss, right? Unless you're loading up like 19 positions at once, like some of these fucking social media traders do. They put like 100 positions into gold and then win themselves a million ZAR and call themselves real traders, which I don't think any of you are. Sorry, I was just spinning a watermelon, and I don't know if you were wondering what I was doing with my hand. I was literally spinning a watermelon just whilst I was chatting to you all. You'll learn my ADHD brain, some of you new people. But yeah, so the worst thing that's going to happen, right, is you're gonna lose 1R. Yeah, worst thing that's going to happen. You've got a good risk management plan in place. There's no problem with that. Lose your 1R, who cares? We can move on to the next trade. At least you traded your strategy properly. But hopefully, this guys give you a bit of background onto how you should be backtesting. Once you've done the replay tool process where you've then gone through your charts and you've got your next kind of 30 to 50 trades, and again your numbers are similar because your numbers will change. So when you're marking up charts like this with price already on the screen, you're going to have the best possible numbers for your strategy. Okay, the best possible numbers because you can just select the perfect trades every single time. When you use your replay tool, your numbers will reduce slightly. With a slightly lower win rate, you'll earn less R or earn less percent, whatever you recorded. Okay, that will just happen. You should still have an edge. From there, I would go and use one of the backtesting tools. So FX Replay, there's a new piece of software called MJS, I think it's called, which is like a hybrid. It's really cool. It's run by, anyone follow Edward FX or Edward XL FX? Like a German.
Maybe.
Yeah, do you know what I mean? He's got a piece of software called MJS or MTS, something like that. And it's a hybrid of FX Replay and what's that backtesting? What's that journaling tool some of you guys are using at the moment? It's like $50 a month. It's pretty cool.
TradeZeller.
TradeZeller. So MJS has the capability of FX Replay for backtesting, and it has journaling software in it like TradeZeller. It's a bit of a hybrid. It looks really, really cool. For those of you who don't know what any of these are automated backtesting and journaling programs, softwares. Okay, so what FX Replay does is it literally you go back in time. It gives you, I think you've got like years and years, 20, 10, 15 years of data. It's really cool. It goes back in time. You set where you are, and then it's like live market conditions. So the market will tick forward like it does. You can speed it up and down like you can do with the replay tool, but you will physically place trades on it like this. I think TradingView have tried to replicate it, but it's not very good. So they have tried to replicate it, but from what I understand, it's not very good. And what kind of drag to add stop loss? And then let's say we're going for that, okay. And this is how kind of FX Replay does. And then it lost the trade. Oh my God, I lost my trade. And then it logs all your stats for you. Okay, it logs all your stats for you and it works out things. And this is where TradingView don't work very well. It then works out things like your win rate, what you should be running trades to, and it gives you loads of really, really cool data. So it's kind of a 3-step process. All right, it starts off, come on. So 1, mark up your charts. Nice and simple. Okay. 2, replay tool, catch trades live. 3, what I would recommend is then FX replay, and then test strategy. Over 100 trades. So what that would give you then, if you get in 50 markups, 50 markups, 50 replay trades, and then 100 on FX replay, you've got a total of 200 trades, 200 trades back tested. You should then be ready to go. Okay. You should then be ready to take that to market and have a pretty good time out there. Okay. You should know what your edge is. You should be ultimately really, really confident in, your trading ability and your trading edge and your win rate and all that sort of stuff. And you should just be able to just go and just the confidence you will have after you follow that process is really quite amazing. That help, guys? Is that hopefully cleared a few questions up about that testing? Yeah. Good.
Yeah.
Good.
Thanks,
Say again. Is that your notes?
This is my FX replay.
Oh, is it? Oh, okay. Look, I love that. I love that. That's data.
That's all backtesting. Yeah,
I love
my
that.
FX replay.
That's what we need. That and in your own way, Steve. That is your data. That is you understanding what's working and what isn't working, and and here we are refining things. And data is so important, guys. I'll be honest. I've stopped backtesting for a little while, just because I was like, I know what I'm doing now. And then bad habits start creeping in from time to time. And I blew a challenge. I think I told you guys I blew a challenge kind of a couple of months ago or so. A couple of months ago. It was just crazy. And I was like, I haven't blown a challenge in months, if not a year or so. And it was because it's like I use the example of like Ronaldo and Messi all the time, right? Okay. I'm not football. For those of you who don't know me, I'm not football, but I know they're pretty decent footballers, Ronaldo and Messi. Yeah. They're like quite good, is what I've heard.
Is that American football?
I've got the names wrong.
Somebody said they're pretty good.
They're pretty good. Okay, cool. All right, so Ronaldo and Messi, right? Okay, even though they're at the top of their game, they still get coached, right? They still review their games. They still turn up to every practice, okay? And I think when we get to a certain point in whatever career that we're in, we forget the work that we've done to get us to where we are, and we feel like we don't need it. I started journaling again, and my trades are kind of way back on point. And it's amazing what such a simple little tweak will make. So don't forget this work that you put in. Don't forget that the work is going to continue. I'm still back testing bits now all the time. There's stuff that I want to talk to you guys. Me and Rob were having a chat off Discord the other day about something that he's found and something that I've been testing for a little while. And Rob was like, we need to talk about it. And I was like, I can't talk about it yet because I haven't done my testing on it yet. And for me, I'm never going to share something with you guys until I'm 100% that it's something that I should be sharing with you. But the process of a trader, I think, is something that where we have to kind of constantly evolve and constantly grow. Anyway, I realized that we spent a lot of time talking about backtesting. That wasn't kind of the plan today. Anton, are you there? I think you are. You are. Unmute yourself, Anton. Can I unmute you? You there? You've not got any. Oh, you're doing that. You haven't got your second phone hooked up. I was going to ask you which one of your 19 questions you gave me you wanted me to go through most. I think he's jumping on through his phone. I don't understand why we can see him on his camera, but we can't actually hear him. Here he is.
Hello.
Hello, Anton.
Echo.
You got your speakers on. Are you at all now, mate?
Sorry, I've been having technical issues.
There we go. There he is. Right, which one of your questions did you want me to cover most? Which was your most burning of questions?
Yeah, let me just find them again. There was a few, obviously. I just blasted a load for you to pick from.
I liked it.
You can use it throughout next few or something.
Where was it? Was it the community chat? Wasn't it?
Yeah.
Right. So topics: momentum versus trend, MSU2 follow up. Well, I think we kind of covered the MSU2 follow up. I'm still doing my own personal testing on it, so I haven't got any updates on that just yet. But that is in webinar 15, I think. 1.3 RR versus higher R approach. I feel like we covered that today. Approach to staying disciplined with trading rules. Again, I think the backtesting really helped with that. Best low drawdown, smallest stop loss, highest win rate scalping strategy suited to past prop firms.
Yeah, that's probably a personal one, to be honest. It might not be
Well, you should talk about momentum versus trend.
Yeah, I think that I get a bit of confusion there.
Do you? Okay.
I think they're the same thing, but obviously
they are the same thing. They are the same thing, absolutely. Okay,
Yeah.
but I think it's more of a psychological thing. Let me show you what I mean. Okay.
Yeah.
Are you still using premium and discount on these momentum or trend trades?
Me?
Yeah.
Yeah. Always use premium discount. It's got to be done. Can't be not using premium discount. That's like saying, are we still using liquidity? Yes, always. Okay,
so even though if it's a strong momentum up bullish trend and it's past the equilibrium, you're still going to look for sells there.
Depends on what time frame I'm on. So this is
that's what I meant.
This is something that I think is really important for us to discuss. Okay, so there's a few time frame rules that I think we need to understand and follow. Okay, so we spoke about this. Oh, Anton, you're in my ears, mate. Where did we speak about it the other day? What was it?
That's sorted now.
Sorted. Okay, so if you're trading, so this is kind of my rules around trading ranges and then entry criteria, if that makes sense. Okay, so if I'm trading a 15-minute range, okay, and I'll show you a couple of examples in a minute. If I'm trading a 15-minute range, then I'm not entering until I get a momentum shift on the 1 minute time frame. Okay, that all makes sense. Yeah, pretty simple to understand. If I'm trading a 1 hour range, okay, then I won't class anything as a reversal until I've had a 5 minute momentum shift. So 1 hour ranges, the reversal, you'll often get like a double breaker structure. There's one there I'm going to talk you through that I'll show you in just a moment. Okay, I'm going to use one of my complex reversals, and this is where this kind of can get a bit confusing. Then this is, for me, that's my trading strategy. Okay, that's what I'm looking for. If you were more higher time frame, I can't just change that color. Okay, if you were more higher time frame and you were trading, and for me, by the way, just so you know, when I say 1 hour range, I always mean 1 to 4 hour, because sometimes my 1 hour ranges can be messy. So I'll use like a 2 hour or 4 hour chart to tidy up my range. Okay, so hourly ranges basically. If you're trading anything above that, so you're talking like daily or above, you want to be waiting and not trading any reversals until you've had that setup appear on the 15-minute time frame. That's kind of my guideline. I'm sure there's other ways to do this, but that's kind of the way that I like to do it. Okay, so for me, my main focus is if I'm waiting for a larger move in the marketplace and I'm trading an hourly range. So let's see if we can find some good examples in here. We normally can't when we do these live, but let's see if we can. What chart is this? Is this Forex.com? It's not my chart, so I can delete this. So is this my chart? Okay. Let me make sure I'm not. It is my chart. I nearly wiped out my analysis then. Shouldn't have analysis on from that long, to be fair, but anyway. Right, so let's just use that. There was a nice little range there, wasn't there? Okay, so this section of price here, that is clearly an hourly range. Now, some of you might argue that this is the range, but the way I look at it is whatever breaks the high to the left, so if that's our true breaker structure, which we can clearly see because hindsight, we've got all of this price action, so we know what it is. Let's just imagine that price is around here for argument's sake. Okay. What I'm then doing is, and I'm going to use my replay tool just so I can illustrate it a little bit better. Okay. What I'm then personally doing is I'm then playing around with time frames until I get the range that looks clearest. So for me, that's on the 2 hour time frame. I mean, I can look at that and say, well, my range is from here to here anyway. But if you do want confirmation, just hop up a time frame and it normally gives you that. So that's now my trading range. So I can mark that one on. Okay. Because this is now an hourly range, I'm not interested in trading any reversal scenarios unless I've had a reversal pattern on my 5-minute time frame. And this is where I think some of us are getting slightly confused. Okay. So the ISC, the MSU, MSU, that's designed for the 1-minute time frame, okay, or 1 to 3, because some of us I know use 3 minutes as well, okay, for 1 to 3 minute entries, okay, ISC MSU, that's designed for the 1 to 3 minute entries. In your 5 to 15 minute entries, this is where you should be using complex reversal and the double breaker structure to really confirm the change. Now, realistically, so let's just draw out ISC MSU, okay? So we have key liquidity here, okay? Got ISC, breakdown, okay? We usually have before there, obviously, tests of these areas. Usually have tests of these areas, of course, before. Okay. Okay, so that is our ISC. That is our MSU. And we have everything we need to get into a trade. And what does that also look like, that structure?
Head and shoulder pattern.
Yep. What about MSU? What about now? What about now? What does that also look like?
False breaker structure.
Yep. So ISC MSU is basically a complex reversal on a very low time frame. False breaker structure. I zoom into that, and you had that on the 5-minute time frame. And basically what we've got here is we've got a false breaker structure, we've got a trap, which is why you'll often get an ISC at the top of a complex reversal. Okay, that's our trap. Then got a true breaker structure down here. And then all we've had here is a retest. Okay. And that as well, again, you know, so, and again, this is where I think sometimes it gets a bit confusing. The MSU, if you had that on a higher time frame, what other entry is the MSU? What other entry model is it?
Possible return to order kind of deal.
Yeah. So RTO, which one is it?
What's that?
Which RTO is it? So it's RTO entry, but which one is it?
A return to order.
Yeah. Advanced, exactly. Okay. So
advanced. Oh.
So the entries that are in the strategy are all very, very similar. Okay. Where we use them differently are based on different time frames. So ISC MSU is basically just a complex reversal on a 1-minute time frame. It's good to look out for the ISC specifically because of the way that the algorithms will deliver. They will make these moves, and the ISC is really important to look out for. Okay. What we're looking for on the 1-minute time frames is we're looking for these quick moves up and down, or quick moves down and up. Yeah. Okay. We're looking for these moves to happen quickly, which is why I put a naming and a framework around the ISC and then the MSU setup. Okay. When we've got this on a higher time frame, like the 15-minute time frame, it might not be as obvious, right? Okay. So the ISC is probably still there, but it might not be as obvious. It's slower. There's less algorithmic institutional manipulation going on. It's happening, but it's happening on a much more micro level. So you might not get the clean ISC pattern that we all like, which is 3 candles above. What makes an ISC is the fact that it forms no more than 3 candles above our liquidity point, right? Okay, when you've got that on a 15-minute time frame, you're going to have multiple candles above that. Okay, and when you go back and you look at your complex reversals, you'll see that you often do get the MSU. You don't always get the MSU, but then what entry is that one there? What's that entry there?
RTO.
Yeah, just a simple RTO, right? Okay, so the RTO entries are higher time frame versions of MSU setups. Okay, and that one up there, if we had it up there, is just an MSU or an advanced RTO. Okay, so timing is really, really important, and your trading appetite will change how you use these timings. Okay, remember, if we're using a 15-minute range, let's go back to our chart. If we're using a 15-minute range, which is what you're going to be using for like intraday, excuse me, guys, sorry. What you're going to be using for intraday setups. So this is where you get an Asia sweep, for example. If you get an Asia sweep, you're probably going to be trading a 15-minute range. And therefore, you want to use a 1-minute entry setup, which would be like an ISC or an MSU, or it could be something like just a double breaker structure. Okay. If you don't get the ISC MSU, you might get like this, where you just get the double breaker structure, and then you can get in on that second breaker structure. Okay. And then, you've got your entry, you've got your impulse, you've got your imbalance, and there's enough for you to want to get into that trade. I'm going to do a full video on this as well, going into this sort of detail. I'm going to add it to the course because it's one of the questions that get quite a lot that possibly I haven't explained well enough in the course content of how to use these alongside each other. Okay, but in this example, just before we go quickly, in this example, we've got our hourly range here. So what entry are we going to be looking for in this range? What do we need? So we've got an hourly, this is our hourly trading range. That's our external liquidity. Let's say that's our range liquidity. Probably that one to be fair when we zoom in. What do we need to signal us into a trade?
Sweep of key liquidity.
Yeah. But I mean, as in terms of time frames. So we've got an hourly range.
5 minutes.
Oh yeah, 5 minutes.
Yeah, we need a 5-minute change of momentum. Okay.
Yeah.
So we then jump down to the 5-minute. So we're not interested in some of these because I'm sure there are some. Okay. I'm sure there's going to be within here lots of 1-minute change of characters and momentum shifts. You look at, okay, yeah. Well, I mean, you would have had a valid entry there. Annoyingly, it always does this, doesn't it? But what I want to be looking at on here is I want to be looking at a clear change in momentum. Okay, when I mean a clear change in momentum, I'm not talking about like these internal sweeps like this. Okay, we do the same again. It's range theory again, guys. You take your range, which is what broke structure to the left. Well, that's the structure to the left. Okay, that's the structure to the left. What structure did we break? Well, it was that high to that low. So that's our bearish structure. Okay, so we need that swept on the 5-minute time frame before we can consider an entry. Now we've had that swept, we've now got a new trading range to be trading from, and then we just repeat the process, right? So now we've got our 5-minute trading range. You can do one or two things. You can enter on the 50% if you want to. You can enter on the imbalance if you want to with your stop below the low, or because this is, quite a large section of price, you might want to wait for an external sweep, okay? And then what do you have there? You then have exactly what we just spoke about. So we've got our false breaker structure. We've got our trap that's set there, which is swept and invalidated, okay? Then you get a sweep. And now, because you're on a 5-minute time frame, so now again we can go down our time frame. So now we're on our 5-minute time frame, which is below a 15-minute. We're now able to go down to like the 1-minute time frame and look for entries. Where's it gone? It's a really ugly section of price, isn't it? Okay, look for entries now using this. Do we get one? Yeah, so you've got your ISC there. Okay, 1, 2, 3. Impulse, imbalance, which is there. Okay, it's only tiny as you can see it, but it is there. You get a retest, push up, push down. We've got, when was this? A really ugly section of price, isn't it? What was this?
That's some wiki stuff right there.
Yeah, isn't it?
Is that like Asia or something?
Candles, but I'm on a different computer.
Yes.
I've got the right candles on now. 2 seconds. All like this.
Just a ton of dojis.
Just probably the chart because you're on ICE, so.
Oh, okay, yeah. I wanted to
not FXCM and.
Oh, yeah, okay.
Let's just say, for argument's sake, just because I'm just conscious of time. Okay, we then get our entry there. Okay, we've got our MSU set up. So you can see how, you know, it's like, you know, you've probably learned in a million strategies before you stack your confluences together. Okay, you could have just entered very, very simply on that 5-minute breaker structure, raid of liquidity, imbalances left behind there. And you could have just entered a really simple entry using the advanced RTO. Okay, that could have been your entry here. Once that was swept, you're going to get in, stop below the low, first profit target up here. Okay, or you can then use your lower time frame. You can tighten things up, get in on that imbalance, and you know, I think using the time frames are really, really important. It's really important to get that right. That if you are trading an hourly range, okay, like we have done here, you're not entering a buy. And again, this was a bad example because there was a really good buy on the 1 minute, of course, as there always is. But you're not entering a buy just purely off a 1 minute market structure shift. Okay. You've got to wait for that on at least the 5 minutes. And on this example, we had it on the 15 minutes as well. So, you know, we've now got multiple confluences to tell us, well, we've taken that range liquidity. What's our chance of taking a trade down here and taking out that high? Well, that chance is now pretty high because key liquidity has been swept. We've had an initial breaker structure, et cetera, et cetera. If, however, you were looking at this, say, as a 15-minute range, and as if by magic, we've got another one here, okay, this is where I use the same theory, okay, so external liquidity sweep, which is here. Okay, we're going to drop down now, so I'm going to use my replay tool to move you guys out of the way. Oh, wait. Come on. Why can't I move it? You still there, guys? You still see my screen?
Yeah.
Mm-hmm.
Okay. So I'm going to move my replay tool down to here, for example. Okay. So now on our 15-minute range, oh God, never use ICE price charts. Horrible, isn't it? Okay. So now I can look at that and I can do the exact same process. Okay. I'm now looking for a setup and an entry off my external liquidity sweep. So do we get one? We don't actually get one on here. We get this push down, push up. Okay. Push down, push up. And then we fail to make, so we haven't actually made a new high until here. Okay. So then you could have got your entry in somewhere like here because that just creates equal highs. That might have been enough for you. Okay, sometimes I'll use that as a liquidity point for me to get into the trade because I'm saying, well, I've got equal highs created there. I've cleared out liquidity. I've had effectively, you know, a false breaker structure here. Okay, it depends on how you're using your structure. That might be enough for you. And then we've had a raid on that liquidity. So now we've had the exact same thing happen. We've had our trap raided and we can get in on an MSU, you know, on a lower time frame here. So, you know, if you're using your 1 hourly time frames, just make sure that you're getting your momentum shifts on the 5 minutes or above. If you're using 15-minute ranges, make sure your momentum shifts are on the 1 minute. You can trade the 1 minute charts, basically. Yeah, that's when you can confidently trade them and confidently go for the 1 minute entries. And you know, get yourself into positions that way. And sometimes you might want to stack them up together. Sometimes, like we discussed here, you might wait for your 1 hour time frame to give you a 5 minute change or 15-minute change of momentum, and then use that range that's created to then use a 1 minute entry, and that's how you can get the really tight entries. Okay, does that clear up a few questions that we've had on kind of timing and ranges and things like that?
Yeah, that was very good.
That'd be helpful, yeah?
Yeah.
And if you ever getting confused with these guys as well, just contact me. That's what I'm here for. If you're looking at ranges, what I'm seeing, what I want to see more of in the charts as well is you guys posting charts and asking questions and posting charts and saying, does this look right, guys? Does that look right, guys? Because I can jump in. It's been a bit quiet in there lately, but it'd be great if you guys can kind of put a few more posts in and post a few more charts and ask for help and things like that, because that's how you go really, really grow and develop. And I'm in there all the time. I feel like sometimes I'm just in there on my own. So if you guys are looking at charts and you're wondering, is this a good place to take a trade from? Don't just sit there and wonder. Put it in there, and either me or some of the other guys will come in and help, and give you a bit of guidance as well. So that is always there if you need it.
What's the best channel to do that check? Like Discord?
So there's the charts and analysis kind of group channel, and that's for literally any chart, any analysis. Underneath that, you've got an EU-GU channel, and you've got a gold channel as well. That's all the kind of individual channels we've done for now. If we get a lot of people that want to trade US 30 or a lot of people trade the USD JPY or whatever it may be, then we can obviously add additional channels in as well. I've just used kind of the ones that I feel like most of us are using at the moment. Cool.
Yeah.
Right, I've got to go and get ready for dinner, I'm afraid, guys. Any questions?
All right.
Thank you very much.
All right, perfect. Well, I think I've recorded this, so hopefully I can get this uploaded to YouTube as well. And then, same time next week, and I'll see you in the charts throughout the week.
Right.
Cheers.
Thank you.
Nice one. Cheers, guys.
Thank you.
Cheers, bye.